You are now tuned into The Money Zone.
Hey guys, welcome to the Money Zone. I'm your host, Folasade, the Accountability Accountant, guys, and I'm so excited to be here once again on a Tuesday at 7 p.m. Eastern Standard Time here on RipRadioNetwork.com or on your social media platform. Guys, tonight's show is going to be, I love it, taxes. Well, no, it's going to be fun. We're going to talk about tax season. It's all, well, to me personally, I'm counting down. Like I got 14 days, 13, I lost count, 13 days, right? But we're far from over from tax season. We're going to talk about some tax due dates, what to expect these next couple of weeks, what you guys need to do and know if you're filing a tax extension and things like that. So guys, if you want to learn more about taxes, or if you know someone that needs to know a little bit more in taxes, please share this video up with them. Guys, just to give you a heads up, we have done a transition again on the studio, so we will be streaming back on Facebook. So hopefully, Brian, are we live on Facebook? I didn't even check yet. So we will be streaming back on Facebook on Tuesdays at 7 p.m. Eastern Standard Time. But don't forget, head over still to Rip Radio app or RipRadioNetwork.com. Okay, guys, so what we're going to do, we're going to take a quick little break. Do me one favor, while you're on break, grab your pen, grab your paper, something to drink, share the video, and then head over to bit.ly/Folasade Radio to subscribe to our mailing list. Guys, I will see you right back after the break. Hey guys, and we are back. So if you're just tuning in today, we're going to talk about everything tax related, tax due dates, what to expect from now going into the due date, what is the due date, talk about extensions, and everything that you can possibly think of. So if you're watching us, grab your pen and grab your paper. Oh, grab your pen, grab your paper, because I may be answering quite a bit of your burning questions that you are concerned about. Okay, so number one, today is what? March 29th. We have a total of 18, 19, 20 days left before 2021 tax filing season is over with. So if you have not gotten your tax account your paperwork, if you have not gotten me your paperwork, you acting like an old lady right now. You are moving too slow. Right now, you are not doing well. Meaning you didn't do good. You don't have your stuff organized, you haven't received all of your paperwork. Something happened. But if you have not been able to get your tax accountant your paperwork as of today or as of Friday, please make sure you call their office and let them know that, hey, I will be returning to you. However, can you please submit an extension on my behalf? So right now, if you haven't filed your tax return or sent all of your paperwork to your accountant, you need to send them call them, email them or something so they can put your extension in. Okay? Number one. Number two, you need to ask yourself, why are you running late? Is it because you haven't received all of your paperwork yet? Is it because you haven't done your bookkeeping for your business? Is it because you're afraid that you're going to owe taxes? What is the underlying reason as to why you have not submitted your paperwork to me or your preparer as of March 29th? So if you're normally a slowpoke, then you're prepared to put an extension in. But I do not advise individuals that know they're going to owe to wait until the last minute to file your taxes. If you know you're owing, if you owe money last year, more than likely, if you made a killing this year, you're going to owe again. You should not be waiting until the last minute. Because remember, with the balance that you owe on taxes, an extension does not give you an extension to pay the taxes. Let me repeat that. An extension does not give you an extension to pay the taxes due. An extension only extends the time for you to file your tax return. So many of you are going to end up accruing interest and penalty charges because you submitted an extension and you thought because you submitted an extension, you didn't have to pay the taxes that was due. Wrong. Taxes are due the last day, tax day. So this year, you need to pay all your taxes up by April 18th if you don't want to accrue interest and penalty charges on the amount that's due. So number one, file the extension. Get in contact with your accountant or file your extension on your own. Number three, if your tax return is extremely complex, right? I don't advise you to be trying to squeeze yourself into your accountant's office if you know you don't have everything in order. I have had to send so many people back this year because a lot of you guys come to me with nothing, no bookkeeping, nothing, no expenses tracked, nothing. So I have to send you guys back so you can accumulate all of your expenses and things like that. So if I'm talking to you, if this person sounds familiar, then you just need to tell them put an extension in because you cannot risk them having to send you back 3 and 4 times to gather all of the paperwork that's required to file your taxes. So guys, waiting until the last minute is not really a good thing if you are owing. But if you're used to getting refunds back, not a big deal. You still get your refund. But if you know you're going to owe, I advise you to get those returns in by the due date. So this year, interestingly, tax day, and I don't even have it on my screen now. Where did it go? Okay, well, On this year, tax day is, I was going to say August, April 18th. So that gives us almost like an extra 3 days. When is the 15th? Yeah, the 15th is that Friday, y'all. So you get one more business day and 2 extra days on the weekend to file your tax return. So April 18th is the tax due date. And that tax due date is also for my corporations. So if you own a corporation, your tax due date is also April 18th. Okay? You need to make sure you have your taxes filed by that time or have your extension submitted by that time as well. So don't go waiting until the last minute. And so, guys, the reason I'm telling you guys to really contact your tax accountant's office to put an extension in, because by law, we're really not supposed to be submitting your tax returns with your tax extensions without at least verbal or written authorization. So a lot of times you guys are putting us as professionals in bad spots because you've been filing with us for so many years. We just know you're always going to run late. But truth be told, guys, you are supposed to mention to your tax preparer that, hey, could you put an extension in for me? And I do approve it. So make sure you file your taxes if you can. If you can't, submit that extension. If you have a very complicated tax return, I don't advise you to wait to the last minute like this because, number one, it increases your chances of mistakes. When you guys wait until the last minute, it doesn't matter who does it, you, a preparer, or anybody. Because we're under time constraints, you might be rushing to file it. The preparer might be rushing to file it and miss something. So don't, if you haven't gotten your accountant all your paperwork, you just put an extension in. It'll save you a lot of headache in the future. Number 2. All right, y'all with them stimulus payments to mess yourself up. A lot of individuals that received the stimulus payment for 2021 and some people did it for both years, 2020 and 2021. You went because you didn't, you wasn't gonna file your taxes no time soon. You didn't went and submitted that you are not obligated to file a tax return to the IRS. So you basically told the IRS, I make no money. I'm not obligated to file a tax return, but I am eligible to receive the stimulus. So you guys then caused yourself unnecessary headache. Okay, unnecessary headache. So now, because you guys then told the IRS that you have a 0 return that you don't need to file, we have had to do correcting amended returns to correct the 0 that you reported to the IRS. So guys, please, if we ever get this opportunity again to get all these stimulus payments, y'all, please don't be going and talking about, oh, it's $0 that you make when you know you made money, and put $0 there when you know you're going to have to file a tax return, because what you ended up doing is making yourself pay for more services. So in addition to me having to file the client's return, I actually had to amend a 0 return. So it just made the process a bit longer. So I ended up having to charge the client a little bit more. And so in that particular case, guys, you want to be mindful that whatever you put on them taxes, especially with them stimulus, if you did 0, you may have to do a corrected tax return, which is an amended tax return, to correct that mistake that you didn't know it was no mistake, to correct what you done. So you're expediting the stimulus payment process. So yes, so make sure if you know you reported 0 to the IRS about your income, but you know your income was not 0 in 2021, please make sure that they do an amended return, because if you pull your transcript, it says 0 there when you on the return for that year. Okay, so that's another thing. So this year has been I think kind of interesting, a bit challenging, because the IRS has not received all of the Social Security numbers from the SSA, which is the Social Security Administration. So a lot of my clients that received the stimulus payment and they just had a child in 2021 at the end of the year, the IRS have no clue about that child and is declining. Well, sent my client the notice saying, hey, we have reduced your refund from XYZ to a lower amount. So be mindful, guys, that when you are submitting your tax returns with a newborn, sometimes I've even had this done last year as well. I've had this happen as well, where the social security number is not even registered as at all. So when I try to submit the electronic file of the tax return, it was rejected. So that this social security number is not known or something like that. So basically, everybody's moving slow. So if you had new children, make sure you do request for your stimulus payment, but also be prepared to send in their birth certificate, social security card, and some proof of residence, maybe like their doctor's note or something like that, so you can now get that difference. Because if you don't respond, they're not going to end up sending you the stimulus payment for the new baby. So make sure you do that. Okay. So the stimulus payments, what else have happened? So y'all know y'all need to be putting y'all extensions in. I do not want y'all to be waiting to the last minute like this. The crypto this year it's been a bit, well, I've seen a surge. So pat yourselves on the back. I'm seeing y'all making y'all investments and I'm proud of you guys, but be mindful that there's a time right now where you may have to keep up with a lot of your own records. You may have to keep up with a lot of your own records. Okay? So for example, if you are on a wallet site and they do not end up sending year-end statements, then you're going to have to export a CSV file. You may have to verify what was a sale, what was a purchase, what was this, what was an exchange. It's just an absolute mess. So my advice to all of you that are investing into crypto and things like that, please make sure you're working on solid wallets that actually give you end of the year reports. I know you guys really invested into crypto because of the unknown and the fact that the IRS was not able to track it, but we're no longer in that day and time now. The IRS is hip. They're understanding it. They're implementing new regulations and things like that to better monitor and control it. And they're trying to figure out how to make sure they get their piece of the pie, y'all. So with that being said, you're going to get caught up if you're trying to hide any crypto or anything right now. So the best bet is to save yourself and your tax preparer a lot of headache by making sure that your coins and stuff is on a solid wallet, that issues 1099s or allow you to generate the appropriate records and stuff. So I had like one client, we had to total everything for the month. It was a mess. Then I had another client, I had to manipulate and do pivot tables of their sales and purchases. And then I had to match the coin, the crypto to the purchase, the sale to the purchase, and a headache. Okay, very much a headache. So you guys want to make sure that you guys have solid wallets. And then also I recommend at the beginning of the year, because I think this was the first year that a lot of clients were dibbling and dabbling with the crypto. But what I realized what I'm going to do, I'm going to have you guys send it to my platform that I can track your crypto on. I think it'll be easier. So if you guys are working with crypto, see if your accountant can receive a copy of your wallet. And so on our ledger and track it from there, because I don't think it's any other way. I had clients that it was just a mess, 4 and 5 different wallets, a mess, y'all. So tighten up your screws with the crypto. And I think, truth be told, that this crypto is going to increase a lot of audits. Okay, because every firm did something different, y'all. Every firm did something different. I've had 1099Ks from them. I've had 1099 miscellaneous. I've had nothing. So every every blockchain or whatever, every other wallet, whatever, they're doing their own thing. This is why the IRS is trying to regulate it. So if I were you, just go with a solid wallet and make sure you send your ledger to your accountant before tax season comes, so we can review it and see what we need to do and what changes and things, or what questions we may have and things like that. It just makes it much more streamlined. Okay, much more streamlined. So we talked about the tax season due date is April 18th, right? We talked about that corporations and individual tax returns are due. We talked about that if you do file an extension, that does not give you an extension to make your payments. It only gives you an extension to file your tax return. Okay. We talked about the Social Security Administration not being up to date with sending out the records to the IRS, so they're not registering all of the children with Social Security numbers. So they're declining stimulus payments and child tax credit payments for for newborns in 2021. Yeah, so that's basically quite a bit of mess happening. And then now, with the child tax credit, a lot of you did not know that you were going to receive an advance of your child tax credit payments. A lot of you thought that, okay, I'm getting something extra when I file my taxes, everything is going to be the absolute same. Nope, it's not. Your child tax credit was an advance on your normal child tax credit. Now, Biden did increase the child tax credit and increase the refundable portion, but it still wasn't advanced on the money that you normally would receive at the end of the year. So I had clients this year that ended up, their refund was like $300. I had clients that if they did receive the stimulus payment, their refund, the child tax credit, their refund would have been $200, but because they declined to receive the child tax credit, their refunds was $3,000. So what I'm learning so far is that I think more of you need to sit down with your accountant year round and get comfortable with all of these major tax changes. We have so many people out here trying to do their taxes on their own, trying to read up on everything. Yeah, you're supposed to know a little bit of something, but the reality is that you can never read more than me, because this is all I do every day, right? Unless you're just going to quit your day job. Don't advise that, right? But this is the time now for you guys to really accept the fact that there's no replacement for the tax accountant. There's no replacement for the tax preparer. Yes, you can use TurboTax. If you think about it, what are they doing? They're trying to have people like myself come in and talk with you guys. So they started off virtual, and then they're going to somewhat like us. Well, they started off as a box software. Well, let me say this: SaaS, software as a business or whatever, right? SaaS, SaaS, yes, software as a, yeah. It's a SaaS. I just can't remember all the acronyms. And so that's how they started their company. But now they're venturing into having real professionals talk with you guys. So that should show you, as a consumer of tax products, that having an accountant is very essential. If the biggest box software online platform, tax prep software, is hiring accountants to talk to you about taxes, then that must mean that you really do need an accountant to help you guys. So stop falling bait to, oh, you can file your taxes on your own. Oh, you don't need an accountant. Oh, no. 2022, this year, which is the 2021 filing season, shows that you guys need accountants, because I guarantee you all of the notices that you guys are going to receive is going to cause us people to be very, very, very busy, and you're going to have to pay me more money to help you get out of the mess. And it may not be like an audit, but it might be, oh, well, you forgot to claim this crypto correctly. Oh, you forgot, or we received that you sold this, but you didn't claim it. You didn't know where to put it at. And then also 1256 contracts with these futures. Guys, you should not be trying to do y'all tax on your own if you're selling futures. If you no, don't do it. If you're buying any type of uh royalties of any type of natural resources, you need to have a professional do your taxes, guys. We're in this complex situation, in this complex time where every dollar matters, what you have going into your house, but what you put on your tax return matters as well. I know back in the day, everybody was getting a refund. It just seemed like, oh, nobody never owed taxes. But right now, with so many of you guys starting side hustles, so many of you guys are doing Uber, so many of you guys doing Lyft and your freelancers and all of this stuff. The laws are going to tighten up. And in regards to like NFTs, same thing. The IRS have not gotten, they know a bit about NFTs, like they're starting to put it together, but they haven't tightened up the, how would I say, the production of the tax forms. They haven't tightened up the requirements, the reporting requirements for NFTs. They're still in the beginning learning phases of it. So I think y'all got maybe like a year and a half before the IRS completely tighten up on the regulations for NFTs. Like they're starting to identify like what's considered an asset, what we might be able to capitalize. If you were to sell, what it would be considered long-term capital gains, short-term capital gains, depending on if you're doing it full-time, are they going to make it like flippers where it will be considered ordinary income? So it's a lot of things happening in the works for NFTs and just this online metaverse landscape. And I'm going to be honest with you guys. And don't shoot me. Do not message me on Facebook. Say, Folasade, this, I got a little bit of stuff, right? I got a little bit of stuff. I got a little bit of crypto. I got a little bit of stuff, right? But I'm not interested. I don't know what it is. Like for taxes, I'm getting it because I have no choice but to learn it, guys. But it's just like, womp womp. Like I get the crypto. I get that part. The NFTs, I don't think I want to be in the virtual world. Like, I don't know. I think that's what's really stopping me, y'all, with the NFTs. I don't think I want to be in the virtual world. I think I'm okay being in real life. Okay. But yeah, so IRS is tightening up everything. So I would advise you to make sure that you report things correctly. And they are reporting things incorrectly as well. So one of my clients, crypto companies, reported that she received $4,000 and something dollars. No, after the cost of the sale of the coin that she purchased, she only made $400 and something dollars in profit. So they're reporting to the IRS the gross amount and not the gross amount and the cost. So it's going to be a lot of people getting audited come this 2021 tax season after we file all the taxes and stuff, because there's not a consistent reporting process and a lot of the companies are not complying by it. And just the significant differences in what the IRS may presume as profit and what really is profit. It's going to be a mess. It's going to be a mess, y'all. A big mess. And I can already feel it. You're being pre-warned here first, as always, on RipRadioNetwork.com, that a lot of people are going to end up being audited because of all of the massive incorrect information and inconsistent reporting requirements for all of these blockchains and wallets and all of these crypto and Bitcoin and NFT companies. Okay. So make sure the way to combat this is to make sure that you cross your T's and you dot your I's with your record keeping. If you buy some Crypto, record it and record the type. So if you bought Ethereum, record it. I had some clients, some of their coins and stuff that they were buying was blank. So how do I know that you sold XYZ if we can't identify when it's purchased? Okay. So I don't want to go all into that, but this year's just been pretty good all along. What I'm realizing, you guys don't want to read either. Not trying to throw nobody under the bus. Read. Even my team, everybody want to skip. Even my daughter, everybody trying to skip reading, y'all. We cannot skip reading. Here's why. We're missing key points, okay? So, for example, some of you did not realize that, when you claimed your child last year and you ended up getting a child tax credit, that it was advanced. So you guys would have knew that. You would have, if you would have read, you would have prevented yourself from having this mistake. But guess what? Because you flop, rotate year after year with your child, with your baby mother, your baby father, your ex-husband, your ex-wife, right? Guess what? That person is now frustrated because you didn't receive part of their child tax credit for the year that they were supposed to be receiving it. So if you and your spouse or ex whatever are split up and you guys share a child, y'all might rotate. 1 year you claim this child, 1 year you claim this child. The bad part of this child tax credit situation is that the person that might be claiming the child this year may not have been the one that received the child tax credit payments in 2021. So whoever is filing the child this year ends up getting shortchanged. So I know, guys, it is some arguing, some bickering, some you owe me $1,500. You owe me $3,000. It's just going to be a mess, guys. So just make sure and this is why I don't really advise you guys to flip-flop. But I know if you are married or you've been in a divorce or you know, baby mother, baby father situation, it's really hard to not do that. But if you guys can come to some agreement, because I know y'all gonna be fussing. Maybe they filed a child next year to recover the child tax credit. Basically, come up with some agreements, y'all. And if you guys did not know, the IRS have a form 8332 that allows you to have the non-custodial parent or the custodial parent release your eligibility to claim the child tax credit. So if you guys are having like any conflicts with your exes or your baby mothers or whatever, baby fathers or whatever, right? And you're having difficulty in having a sound understanding of who's claiming the child where and what year and why, then you guys need to look into that form and getting it completed. So it'll be an agreement that you will file it every other year. And if they attempted to do it, it won't get accepted by the IRS. So make sure you guys really just pay attention. And if you have not filed your tax return, okay, so I'm just Michelle said that if you have a 9-to-5 and the business or your taxes, I will have to put that as a question. If you have a question on Instagram, put it as a question, and then I can come back and answer it because I'm trying to read it, but it's kind of hard to stay focused or whatever. So if you're posting on social media, if you're on Facebook, you can put on the comment section of the feed, and then I can answer it. Okay, but if you're watching us on Instagram, if you can put it as a Q&A so I can come back to the question, that would be great. Okay, so we talked about the NFTs, we talked about stocks, we didn't really talk about the stocks. Stocks are eventually what's going to happen. The reporting of NFTs and the reporting of crypto, it's going to eventually align exactly with stocks. It's getting closer and closer to that. So it's not going to be nothing different, and it's not going to be anything special either, but you guys won't be able to hide from the IRS, okay? We also talked about you guys putting extensions in. We also talked about you guys not rushing to file right now. If you know your tax returns are very complicated because you might end up making a mistake. So it's best that you guys put an extension in. And if you know you're going to owe, try to pay the taxes that you think you're going to owe by April 18th to avoid any interest and penalty fees, okay? So far we talked about a lot. So guys, what I'm going to do, because I just realized it was 7:35. I was just over here rambling. Y'all know I go to the dark side when I'm talking about tax. I don't know what it's like. I blank out, y'all. So I'm back alive again. Okay, so what we're going to do, guys, we're going to take a quick little break. When we do that, I advise you guys to grab you. I've already been dropping so much information. You should have a lot of notes. If you don't, you have time, grab your pen, grab your paper, and we're going to continue the conversation on after we return from our break. Please don't forget to head over to bit.ly/Folasade Radio to subscribe to our mailing list. But then also go to Instagram and subscribe to my Instagram at The Money Zone with Folasade. The Money Zone with Folasade. Head over to my Instagram and subscribe to the radio show's Instagram. And then follow me on Instagram as well. So, guys, we're going to take a quick little break and we'll be right back. So your refund can still be high. Or if it's not the case, your refund would definitely be lower. So that's really a few of the reasons why many of you are going to be shocked, thrown back, taken aback, beat up, disturbed, might be crying in your feelings because your tax refunds are much lower than what you anticipated. Your business is right on that piece of paper that I can maximize, but guess what? Many of you guys took shortcuts in your business. You've been taking shortcuts for years. So you're out of luck right now. You're looking at that pile of paper and you like, yo, you serious, Folasade? Yes, I'm serious. And I'm very serious because right now your bookkeeping is what's going to either catapult your business or be a detriment to your business. And your lack of it is definitely a detriment, especially in the situation that we're in right now, where we all need to be maximizing our deductions and paying as little bit of taxes as we legally could so we can sustain in our businesses and be able to afford our lifestyle. But if you are not doing your bookkeeping and if you're not keeping proper records, then I guarantee you are not paying the right amount of taxes that you're supposed to pay, or you're not getting the right amount of refund that you are supposed to be getting. So if you are a business owner, the way for you to protect your wealth, your income right now is by making sure you cross your T's and dot your I's and get your bookkeeping in order and stop playing games like you out here not trying to build a successful business. Only people that don't want to be successful don't have an accountant. Only people that don't want to be successful don't do their bookkeeping. And right now, your small business is maybe somebody else's blessing if you were to get your stuff in order. So you need your bookkeeping to make sure that every dollar you spend in your business is written off. Hey guys, and we are back. Okay, so guys, I was dropping so much. I gave you guys so much information. We talked about extensions. We talked about crypto. We talked about what I'm seeing in mistakes, what I predict is going to happen after this tax filing season, the increase in audits, things like that. Guys, I'm just, coming here to be honest with you guys that I don't want you guys to be afraid of the IRS, but I just want you to make sure that you understand that you will be able to sleep much more peacefully at night if you know you're doing things right. Okay. Many of you are not achieving the level of success that you know you can because you don't have your accounting and stuff in order. I have people that pay me monthly and don't ever send me anything, to the point where I have to email them down and say, are you even interested? Like, you're just paying the fee. I can't even do completely all my job. Like, we have to start asking ourselves, what do we really want? If you want to keep more money in your household, you have to understand the tax game a little bit more. If you want to make sure that you can afford the lifestyle that you want, you will need to do a budget. If you know you want to be able to use the tax code, like I hope you do, to build generational wealth, then that means you need to be working with a tax professional that know a little bit about tax planning, because you can use the tax return as a tool to encourage you to build generational wealth. We just have to know it's possible and get started and get some type of direction. So right now we are 20 days from the tax filing season ending. And I know a lot of you do not realize that these changes that we have now, one of the things that we didn't realize was that unemployment, the IRS did not approve another reduction of unemployment. So Biden said, oh yeah, I'm going to give you the unemployment, but I'm not going to subtract anything off. You're still going to have to pay taxes on it. So a lot of people were anticipating to get the same refund that they had last year. Not the case, because the earned income made them owe. The unemployment made them owe. They didn't have taxes taken out. And so that's tip number 2, guys. If you are receiving unemployment of any sort, please just pay the minimum taxes or something. I'm seeing so many of you guys getting a hit on the end and was like, oh, I expected it, but really be in your feelings. No, for real, you made a mistake and you should have had them taxes coming out. You were moving too fast. And so we are hurting ourselves because we're not slowing down and falling in love with our money. Because if we felt more in love, and I know you want to, oh, God, I don't want you to believe in money or worship. No, I'm not saying that. I'm talking about if you love your money, you should be able to attract it. Like if you feel sexy, right, as a woman, you attract men. You have that little eye look, you look, whatever you got. You do that little thing, right? And men, come to you. Or as a man, what you do, you got, if you tall and chocolate, whatever, with the ladies, what you wink at them and they start falling apart. Whatever you do, right? In that sense, you have to have that same form of attraction with your money. And taxes is the biggest impact of your money. So let's look at it like this before we close out, guys. And I just had a conversation with a client about this 2 weeks ago. And I hope that you guys get what I'm about to put down. Do you know that because you are earning all of the money that you're making, the IRS is taxing all of that because it's earned income? Remember, that's what gross income is. Gross income is the money that you receive that is earned and all that, okay? So the IRS taxes earned income higher. So that's the 9 to 5, and that's your business. If you are sole proprietor, right? They tax that income higher. Okay. So if you know that your family's budget is $10,000 a month, but you're taking home $30,000 a month, do you realize, and you don't need that money for your household, do you realize that you're paying taxes on $30,000 a month rather than $10,000? I'm going to repeat that again. A lot of you may not have a budget, and you don't realize that when money comes into you, you are paying taxes on that money. But if you had a solid budget in place, you will see, okay, my family only needs 10 grand. So why am I letting my company pay me on W-2 50 grand per month? So that means you're paying taxes on money that you're not even using. You're paying taxes on money that is accumulating in your bank account. You are paying tax on money that is accumulating in a 0.000123 interest bearing aka non-interest bearing bank account. Whereas logistically, guys, and this is what you guys need to think of, if you can divert that money, if your job have employee stock options, if your job have retirement account plans, things like that, the tax system rewards you guys in not receiving that money directly, but you directing that money into that retirement account. So you are paying taxes on $40,000 that you're not even using. You're probably paying more than that. How many of you have so much money accumulated savings and you're just building up slowly but surely, putting $2,000 a month, and you're not even thinking that, oh my gosh, I have this $2,000, right? But I paid $500 to receive this $200, this $2,000. Give me 1 second. Let me see what the tax on that. Okay, that's 25%. So if you only needed $2,000 in your household, but you're receiving $10,000, you're paying more money on taxes. You're paying taxes on more money that you're not even going to receive or use. So it's not necessarily smart. And this is what a tax, and this is why they say the rich play tax games. The rich realize what their budget is. They only take what that is and divert the other money into tax deferred assets and things like that. So to really get a hold of the tax code, to really get a hold of financial literacy, which is our topic for next week, guys. You want to tune in next week. We're talking about financial literacy. It starts with that budget, because the budget would say, all right, the Brown family only need $50,000 a year to survive, but the Brown family bring in $150,000. So the Browns have $100,000 that they either can invest, save, or spend, or tithe, invest, save, and spend. So if you know you're going to save $50,000 of that $100,000, why did you receive it on W-2? Why didn't we have them put that in your retirement account so we won't pay taxes on it? I need us to really fully understand that taxes could be controlled, and we're being hit in every area possible. Think about it. You receive the money from your job, then you go what? Get gas, you're paying gas tax. You get on the highway, you're paying a toll. You go buy something from the store, you paying sales tax. Okay, you go buy a vehicle, you paying access tax. If you're a trucker, you paying the toll, the highway toll. We're paying tax after tax after tax simply because we're not keeping the money in the hand, or directing it in other areas. Prime example. Let's say, for example, your check is $50,000. But you only receive $25,000, and they put the other $25,000, well, max out to your 401k, $20,500, right? They max out the 401k. So that means you didn't pay tax on the money that was contributed to the 401k. However, you are building generational wealth because your 401k contribution is accumulating interest and is growing tax-free. But if you would have received all of that money, then you'll be paying taxes on money that all you're going to do is have sitting in your bank account. So I want you guys to kind of digest that concept, because a lot of people will understand that, wow, the tax system can be manipulated legally. You just have to know how to do it. And it's really on the trick of, are you receiving this money? And see, the IRS got kind of slick a little bit too, y'all, because they know that that's a way to not pay taxes. So what they started to do was put parameters in place for businesses. So there's this thing called accumulating earnings. If you're a corporation, right, they put it in place where you can't accumulate a certain amount of money. And they don't want you to hoard the money. They know that if you don't take it, you don't pay tax on it. So the IRS have realized that that's one way for businesses to hoard. But they don't realize that, well, you might not realize that you could take that same strategy and hoard your money into your retirement account. Hoard your money into your Roth. Hoard your money somewhere else rather than just sitting in that non-interest bearing account, which you pay taxes on that money that you're not going to use. So see what other, options your job may have, guys, because that's key. If you put money into your children's 529, you get a write-off for it. Remember, you're taking money from you and diverting it to the 529. You get a write-off for it. The problem is when you get the money for the 529, you're already paying tax on it. That's the problem with some of the stuff. So you guys have to really fully understand that there's a strategy behind it all, but you cannot sit there and attempt to try to know everything. This is where all of you guys need to start hiring tax professionals. We're at that space. It's game time. Like my pastor would say, Pastor Ron would say, it's game time. And it's game time for all of us to build generational wealth. And I want to let you guys know that it starts with first with your budget, realizing what you need to sustain in your extra little stuff, and then us figuring out a way for us not to receive that other money, so we don't have to pay taxes on money that we just have sitting in the bank. And guess who's benefiting? The bank. And see, this is the thing. Let me close out with this. Another reason why I don't want you guys to just do that is because guess who benefiting from your money just sitting there? You already done paid taxes on it. The bank. You got that $50,000 that you paid $10,000 on taxes for, right? And the bank has flipped that money 100 times. They made about $5 million in interest off your $50,000. So are we paying taxes on money just to put in the bank for the bank to play with our money and accumulate interest and fees and assets? Because when they start garnishing people because they didn't repay the loan, they accumulate assets and everything. Are we helping the bank get rich by taking all our pay and not being smart? And guys, please make sure if you see this, guys, if you see anybody talk about this on Instagram, you know it was me first. So yes, stop. Don't even be trying to steal my stuff now, y'all. I'm always the first one to put the concepts out and then everybody try to run with it. Nobody did not tell y'all the trick on making sure that you only pay tax on what you receive. And we can figure out a way to divert that somewhere else. Folasade told y'all. Okay, but this is where you guys have to really sit down and either talk with me or your tax professional and say, okay, well, how can I reduce the amount of tax that I'm paying on money that I'm not going to use? And that's for the people that have the budgets. That's for the people that is just going to have that money sitting in there and not flip it and not make investments. So we're in this with 20 days, y'all. Get it together, tighten it up, get your documents into your accountant, get your documents to me, please. And pay those taxes by April 18th. File those extensions if you're not going to file. And let's rock this thing on out, guys. Okay. So yeah, guys, I will see you guys next week. Make sure you guys subscribe to our mailing list by going to bit.ly/Folasade Radio. Head over to the Money Zone's Instagram, because we're going to not necessarily stream all and post everything on my personal page. We're going to build the Instagram for the Money Zone. So follow the Money Zone with Folasade on Instagram. And don't forget, guys, tune in for next week because we're talking about financial literacy and we're going to pull it all together, y'all. So I look forward to seeing you guys next week. Love you guys. Good night.